Hi, it's Nero here from Investment Rise, and today I want to talk about how some investors are going to profit whenever interest rates do rise. Now, I get it. You might be wondering, well, how does a property investor profit when interest rates rise? I mean, right now in the media, there is so much talk about property prices falling whenever interest rates do rise. And as I've mentioned in earlier episodes, it almost seems like every few days there's a new expert coming online, hitting the headlines and predicting a bigger price fall than the previous expert did a few days ago. And I expect this game is going to continue for some time yet, just like it did during 2020 when COVID was at its peak, and every week we saw some so-called expert coming out to predict how much property prices would fall, and then the next week we saw someone else come out with an even bigger prediction. The fact is we have multiple markets in the country, and some of them may suffer when rates rise, but there is no doubt that there'll be many markets who will continue to rise in value month after month because of how well they're placed right now. And I've spoken at length again in earlier episodes about how some markets are rising right now. I expect they'll hit 10% growth, if not even 20% growth this year, and then continue that growth phase. Okay, so in this episode though, I want to talk about a 4-step recipe that I see expert property investors follow, and that if you follow these 4 steps, you will profit as well whenever rates rise. And what I'm going to do is I'm going to outline these 4 steps, and then I'm going to show you how and why property investors who follow this 4-step recipe will profit. Okay, so let's begin with step number 1. When you're looking to buy property, ensure you buy property where demand is higher than supply. Okay, now this is a well-known thing in property investing circles, that whenever demand is greater than supply and other things being equal, prices will rise, okay? But the thing is, how do you find out where is demand higher than supply? There's no metric online that's going to give that to you, all right? But there are some indicators you can use, and 2 of my favorite indicators. Number 1, time on market, or days on market, okay? So what I want to see is that the days on market is reducing, which means that properties are selling more and more quickly. Because if properties are selling more and more quickly, then it shows that there is strong demand in that particular suburb. And we are talking down at a suburb level here, okay? That's the first indicator I look for. The second indicator I look for is average vendor discounting to be as small as possible. Look, I get it, we all would love a bargain, okay? But when you're looking for markets where demand is higher than supply, you want to be looking for markets where vendors or sellers don't have to accept a discount. As long as the price they're offering is fair at the time, then they shouldn't have to entertain a huge discount because there are so many interested buyers and so much demand. All right. And so if you can find markets which have reducing days on market, so properties are selling more quickly, and vendors don't have to entertain a discount, you've got 2 very strong indicators just there that you're buying in a market where demand is higher than supply. And as I said, all things being equal, that should indicate prices will continue to rise. Okay, that's step number 1. Step number 2. Buy in areas which have a good, strong local economy and where there is strong jobs growth, okay? And here's why. When there's strong jobs growth, then you're going to be buying in areas which are enticing people to come and live there because access to jobs, okay? And sure, some will come to rent and some will come to buy. But what you're doing is when you're targeting areas which have strong jobs growth and a good, strong economy, then that's going to keep demand strong, not just right now, but in the future. Step number 3, buy in areas which have a low vacancy rate, which indicates strong tenant demand. Now, whenever someone's looking to invest in property, one of the biggest concerns, and rightfully so, is will my property rent? All right. And so you can really ensure that you're minimizing the risk of extended vacancies and making it easy as possible for you to get a tenant by only targeting those suburbs that have a low vacancy rate. Okay, aim at the moment to get something below 2.5%. But the other thing is that when you have a low vacancy rate, that indicates that there are more tenants looking for properties than properties available for rent. So demand is greater than supply. Now, if that continues, then that also is a good indicator that rents will increase over time, okay, which will improve your cash flow. So not only are you buying in a market where it's easy to get your property rented so you can sleep at night, but you're also buying in a market where rents are more likely to increase going forwards. Step number 4. Once you've identified these few suburbs that you're going to target, then focus on those where you can find properties that will give you positive cash flow. And what I mean by that is where the income from the property is greater than all your ongoing costs. All right. Now, yes, that means you're going to have to do some numbers, you're going to do some cash flow analysis, or your advisor will when recommending properties to you, right? But you want to make sure that you're getting positive cash flow once the property is rented, all right? So therefore you're not out of pocket each and every month. Okay, so what's the benefit then of following this simple 4-step process? Well, first of all, when you do, you'll be finding areas with great potential for capital growth while also giving you positive cash flow. Okay, so that's the first benefit. But really though, this episode is all about how to profit when interest rates rise. Okay, and when you follow this 4-step process, you will be among those investors that profit the most whenever interest rates rise. Why? Well, first of all, when interest rates rise, what happens? Generally, over time, you'll have less people looking to buy and more people looking to rent. Now, remember, you have bought in a suburb that is positively cash flowed, okay, where vacancy rates are low and where there are more tenants looking for properties than available properties. And now what happens? You've now got more people looking to rent, okay, which makes it easier to get your property rented and makes it easier for you to increase your rents. And if you've done this really, really well, you will find areas where rents rise faster than interest rates rise, okay, because of the excess demand over supply, which means your cash flow position improves, okay? But even if that isn't the case, even if just interest rates rise and then your rents rise a little bit to offset that, you also, as an investor, get tax benefits to help you further offset the impact of interest rates rising. But certainly, as many expert property investors follow this 4-step process, you'll see that they are not at all concerned about rates rising, okay? They understand that when you're looking to build a property portfolio that pays your passive income, you need to ensure that you're buying properties that will work for you when rates fall, but they'll also work for you when interest rates rise. Okay? Because the fact is rates are going to rise and fall as you own property. And so you need to ensure that you're following this 4-step process so that then you are maximizing the benefit whichever interest rates are doing, right? So there are going to be times when maybe rates are falling and you're going to get more capital growth than rental growth. Other times you might find that you're getting more rental growth than capital growth, right? But you need both over your property investing journey. It's just unlikely that you're going to get both at the same time. Now, you might be thinking, but Nero, you said to buy in areas where demand from buyers is more than available supply, okay? But if rates rise and then more people look to rent, less people look to buy, doesn't that mean that you now have an area where demand is starting to fall, right? And if you thought that, you're definitely thinking the right way. But remember, this is a recipe, a 4-step process that you need to follow, because the other thing I said was, though, you're buying in areas that are bringing people into that area, or people looking to move into that area because of the economic vibrancy of the area, because of the strong jobs growth, okay? So you're always going to have ongoing demand. And as long as that demand is higher than supply, odds are you're going to get price rises, but at the very least, you're not going to see prices crash, are you? So when you follow this 4-step process that I'm giving you, you're going to have periods of time when you get price growth, which is capital growth. Other times you're going to get rental income growth. But the fact is that you'll be among the investors who, when others are letting headlines, emotion, the opinions of others stop them from investing, you'll be the ones who are profiting the most. So the question for you is, Are you going to be in the camp that profits the most when interest rates rise? Or will you be among the camp who chooses to believe headlines, other people's opinions, especially those who don't have 20 years of property investing experience like I do, and who instead choose to believe in emotion and fear and whatever else, and then find themselves being left behind? Which camp are you going to be in? Hi, it's Nero here again, and thanks so much for watching. If you like what you saw and you're looking for a proven recipe, a blueprint on how to build a property portfolio that gives you passive income, then click the link below this video and get a copy of my book, Wake Up Wealthier, How to Build a Property Portfolio that pays you an income each and every month. Okay, when you click the link and you download your book, you can get both the digital version and the audio version in case you don't like reading. All right, so I used to sell this book for $49, but right now I'm making it totally free. Why? Because I want more people to get this information, and I know that a segment of you will then like what you see in the book and choose to reach out to find out more about our services. But even if you don't, if you're serious about building a property portfolio that pays your passive income, then you really want to get my book, Wake Up Wealthier. It contains the secrets that I have fine-tuned over the last 19 years. It's totally free for a limited time. Click the link below.